West Dimensional runs $575 billion, including a suite of ETFs. Dimensional, known for long-term fundamental investing strategy. What advice are you giving investors worried about the impact of inflation on corporate earnings right now?
Well, there's a couple of ways to look at this. First of all, we have market-based gauges about what inflation expectations are. I know we've come out of a period where there's been a very large change in consumer prices. But if I look at break-even inflation, so the difference between yields of inflation-protected treasuries and nominal treasuries of the same maturity, it's dropped down to about 2.4% as of the end of last week. So that would seem to imply that forward-looking inflation expectations may not be as high as what some people would have you believe.
Yeah, that's a good point. So you always emphasize the long-term investing, and I love it when you bring these statistics. The S&P's down, what, 15% this year. In emphasizing long-term investing, you've often pointed out that there's been 15 drops of at least 20% since the market in 1926. Yep. At the worst this year, we were, what, 22% off of the highs? But drops worse than that are fairly rare occurrences. Not many of these 26 events went past even the 20% mark.
Yeah, exactly. And, like you mentioned, we have 15 of these bear markets historically where there's been a drop of at least 20% in the U.S. market. And more than half of those, the drop stopped pretty soon after we crossed that 20% barrier. We never made it to the next threshold, which would be minus 30%. Those were much rarer. And a really key aspect here is the recoveries were often very swift. So within 1 year, about 60% of these bear markets were recovered back to pre-market downturn levels. So it can happen fast and furious.
That is an amazing statistic. I want to have you repeat this. Within a year, when you had a drop of 20% or more, within a year, half the time you've recovered all the losses.
More than about 60% of those 15 outcomes recover within a year.
So this obviously goes to the point about staying invested.
It does, and here's another interesting aspect. Okay, so we've mentioned the recovery happened. Even during the recovery, it wasn't like a linear piece of progress from the bottom back up to the top. 39% of days in between the market's trough, I'm sure I'm mispronouncing that as my father always tells me, and the recovery point, 39% of those days saw negative returns in the market.
Yeah, it's trough, by the way.